Well, give us your assessment on the latest trade action coming from the U.S. and China. How do you trade in the Forex space around these tensions?
I think we'll probably have a little bit more pressure on most currencies against the safe havens. So you get support for the likes of the yen, Swiss franc, gold. I think gold is a currency. I think that's they're going to be a supportive pressures on those currencies against the euro and against most major EM currencies. I think the dollar is going to be a little bit mixed because it's in the eye of the storm, but at the same time, historically, it's been a safe haven currency. However, I think we should step back. I think we should step back and recognize that this tit-for-tat tension, actions on trade, it's hurting, it's pushing up volatility across currency markets, but ultimately, the way it's being done, it suggests it's still measured. We're getting plenty of notice on it. So I think we should take a view that the measures that we're getting announced are, at least on the US side, are for domestic political consumption. So we have the midterm elections, we could see a further ratcheting up, but ultimately after we get past the midterm elections, we could get a de-escalation. So I wouldn't be using this as a long-term factor for trading currencies.
And Koon, interesting when you say that it's measured, that investors are getting a lot of notice, that many of these moves have been flagged. You could also just replace that and say the central bank moves as well. Certainly that seems to be the story when we talk about what's going on at the Fed. And that's important because ultimately what happens there will have a lot of influence on the emerging market space. We've already seen some jitters just tied to what's happening with the Fed and normalization going on. But you think there's opportunity now to get into some of the EM areas that have been pretty hard hit already?
I think you've nailed it. Absolutely. As you said, we've had this flagged for us. It's a drawn-out tightening cycle, and to hear the Fed being a little bit more hawkish than people had expected last week, that doesn't change a lot, right? We've known this for a while. We've known we've got a tightening cycle in the US. At the same time, we've got normalization pressures everywhere else. Sure, Draghi surprised us to the downside last week, but ultimately we're going to get tapering in September, and beyond that we know what the next move will be. So I think there's a little bit too much focus on the recent weakness in data in the euro area, too much emphasis I think on divergence, and because of that I think there's a little monetary divergence, and I think people are a little bit too scared about euro going lower, and that has a knock-on effect for EM currencies. Long story short, I think this too much focus on divergence has given a little bit too much negative pressure on the euro, a negative knock-on for EM currencies, and at the same time we're at a stage where EM currencies are looking cheap. A lot of EM assets are looking a little bit cheap, and that matters in terms of making your asset allocation decision.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.